When it comes to optimizing your withdrawal strategy for tax savings, many retirees don't realize that the decisions they make now can save them thousands down the road. You've worked hard for your savings, but without the right approach, the taxman could end up taking more than you'd like. In this video, I'll show you exactly how to avoid those pitfalls and maximize your tax savings. Before we dive in, I want to give you a quick tip that could change the way you think about your retirement. If you're serious about protecting your wealth, especially if you're approaching the next couple of years, then the first link in the description will take you to a free gold IRA guide that's helping thousands of Americans like you safeguard their savings. You won't want to miss this. Now, let's jump right into your withdrawal strategy. The first step is understanding the different types of retirement accounts you're drawing from, because each one has its own tax rules. Traditional IRAs and 401ks are tax deferred, meaning you won't pay taxes until you withdraw the funds, but that can come back to bite you when it's time to take distributions. On the other hand, Roth IRAs allow for tax-free withdrawals, but they have their own set of rules. A key mistake many retirees make is withdrawing too much from their tax-deferred accounts early, pushing them into higher tax brackets. Ideally, you want to balance your withdrawals so that you're staying in a lower tax bracket. For example, withdrawing enough to live comfortably, but not so much that you push your income up into a higher tax rate. This is one of the easiest ways to optimize your strategy. One crucial point is considering your required minimum distributions, or RMDs, especially from your traditional IRA or 401k. The IRS requires that you start withdrawing from these accounts at age 73, and the withdrawals are taxed as ordinary income. This can be a shock to many retirees who haven't planned for it. To optimize, you'll want to start withdrawing strategically before you hit the RMD age to avoid large taxable amounts later. Another thing to keep in mind is how Social Security affects your taxes. Depending on how much you withdraw from your retirement accounts, a portion of your Social Security benefits may become taxable. This is something to carefully consider when structuring your withdrawal strategy. It might seem confusing, but once you understand how it works, you can avoid unnecessary tax hits on your Social Security. Now, let's talk about one of the most powerful tools available to American retirees, gold IRAs. Gold IRAs allow you to diversify your wealth in a way that protects you from market volatility and inflation, all while offering tax benefits. By adding gold to your portfolio, you're not only protecting your savings from unpredictable market swings, but you're also positioning yourself to potentially reduce taxes by taking advantage of a tax-advantaged retirement account. The IRS treats gold as a tangible asset, so when you hold it within an IRA, you can benefit from tax-deferred growth. If you're thinking of adjusting your withdrawal strategy, consider whether a gold IRA makes sense for your portfolio. The tax benefits are just one part of the equation, but if you're looking to secure your wealth for the long term, it might be the right move. I'll say this again because it's crucial. If you're serious about protecting your wealth in the next 2 weeks, make sure to check out the free Gold IRA guide linked below. It's a step-by-step resource that's been helping retirees like you safeguard their savings, and you'll want to have all the information you need as you plan for the future. To wrap things up, when optimizing your withdrawal strategy for tax savings, start by balancing withdrawals from your traditional and Roth accounts, take RMDs into account, and consider the impact of Social Security taxes. But also, don't forget to explore alternatives like gold IRAs. For American retirees with 100K or more in an IRA or 401k, or even 5 plus in savings, this is an opportunity to protect your wealth from unnecessary tax hits and market instability. If you want to learn more and start making your tax saving strategy work for you, be sure to check out the free Gold IRA guide in the description below.